Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, November 27th, 4:48 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend following our the O'Neill follow-through days on November 1st and 2nd. You can see the trend gauge over here in the upper right. Got the green arrow on market leadership, acting fine, leadership plenty, stocks breaking out of bases and going higher, holding their gains on earnings gaps up and continuing higher. Good environment for making progress. Might be time for a bit of a pause. We'll talk about that. I mentioned it on Friday. We'll follow up on that today. All five of the major indexes are trending above their short-term 21-day exponential moving average. Green arrow there. Same situation with the 50-day moving average. Green arrow there. Mixed bag on the 200-day moving average. Mid caps above, but slope of the line not quite turning up yet. Small caps still below the 200. The big cap index is the Dow, the S&P, and the NASDAQ above their 200-day moving averages. So what happened today? Day 4 of very tight, choppy trading, very tight range. Let's see, 14 points. Yeah, 14 points, less than 1/3% or right at 1/3%. Not typical, but it means the market is coiling for a move. We'll get back into that when we get into the charts. Tried to break out midday, was turned away, and then closed weak. So not the best action, but again, still consolidating the recent strong move up. The big 7 stocks up on average of 0.14% today. RG8, this is our 8 ETF, 8 growth ETF composite, just barely negative on the day. S&P 500 opened down 0.1%. Was battling with flatline and even positive part of the day. As I mentioned, tried to break higher midday, but week into the closed not quite at the bottom of the range, but in the lower 20 percentile, down 0.2% on the day, equal weighted, same return. NASDAQ 100 was the leader on the day, did face some selling into the close also, down 0.1%, equal weighted, slightly worse, down 0.26. Dow down 0.2, mid caps down 0.14, Russell 2000. Small caps well off the lows. Nice bounce area. We'll take a look at this when we get to the charts. Still down 0.35% on the day, but bounced where we needed to. Global diversified 60-40 stock and bond, just barely positive. This was all bonds today as bond prices ticked up while yields pulled back a bit. In-house GROTECTION down approximately 0.22%. Led to the downside by Lilly and Novo Nordisk. To the upside by Nugget, our gold, 2x gold ETF. Let's get to the charts, and then the tail of the tape. We'll start off with the S&P 500. It's best viewed on a 15-minute chart here, so you can see this most recent move higher. This was the positive long-term 20-year bond auction back on the 20th. And the market broke above some resistance that day and powered higher into the close. Since then, we've got 1, 2, 3, 4 days of basically going nowhere. Tight range, 45.25 on the downside, 45.68 on the upside. Very tight range. Step back here. We also had a very tight range here, and we talked at the time, what are we gonna do? Now, markets should resolve consolidations in the direction of the primary trend. In this case, the primary trend is up. We got that resolution higher on the 20th. Now here we are again, tight range for 4 days. Again, I'll say it. We should resolve in the direction of the primary trend, which is higher. Take a shot at this 4,600 area, try to overcome 4,607, which was the high before we reversed lower and put in this 3 waves down starting in late July, which we recouped a lot quicker than we went down. Usually the market takes the escalator up and the elevator down. This was the opposite here, but we'd been talking about for a while that market needed a catalyst to go higher. We got that catalyst by a weak CPI report and perceived dovishness from the Fed. So now we consolidate, see if we can continue this move up higher. Plenty of leadership stocks supporting this move. We don't anticipate, we don't predict, but we know the rules. We know what should happen. If we get expectation breakers to the downside, we'll deal with it. For now, we're expecting higher prices and positioning accordingly. Here's the NASDAQ 100, very similar setup, same day. Break higher on the 20th, again, right at that bond auction, and then tried to move higher last Wednesday, failed early, and again, just a tight consolidation for 4 days now since this move up on the 20th, 4 sessions sideways. On a daily chart, you can see it very similar. We did break above this flat base, this 387.98 pivot, and we're holding it on pullbacks, not making any progress though, but it's really, it's normal action. My expectation, I talked a little bit about this Friday, is that we get a touch maybe of the 8-day exponential moving average, maybe undercut it, and then head higher. We came within 0.25% overnight on the S&P 500. We came within 0.25% of this 8-day moving average, the overnight low. We'll take a look at that when we get to the tail of the tape, but we were off of the lows by the open today, not making any progress since then. But again, completely normal action. Showing some relative strength on the Dow over the last week, and that's because tech stocks are pausing. This is a more defensive index, but Dow continues to work its way higher. Not a surprise there. When the NASDAQ is not outperforming, the Dow and the NASDAQ kind of pass the baton between each other. You can tell by these choppy relative strength trend line, this blue line here. When one is zigging, you're almost assured that the other one can be zagging. Let's go to mid caps now. MDY, multiple closes above, let's see, 1, 2, 3, 4, 5, 6 closes now above the 200-day moving average. It's starting to flatten out. The 8 catching up to price, and it has crossed above the 200, so that's a positive sign here. But again, we want to resolve this consolidation in the direction of the primary trend, which, when coming off the bottom, is higher. Here's IWM. Very nice tight action here after the irrational exuberance reversal off the 200-day moving average back 2 weeks ago, but tight sideways action, not making the progress that the big cap indexes are, as you can see by the lower lows on a relative strength standpoint. We did not attempt to break higher since this negative reversal on the second day off of the lows, but this is just it's a bullish consolidation. It's a flag. The markets do it all the time. But again, our expectation is that it resolves higher, clears 180, and then clears the 200-day moving average. Those are the 5 major indexes. Let's go to the VIX now. VIX popped a bit today, but ended near the lows of the day. No real surprise there. The dollar week today opened about flat, weak into the close. How did that line up with gold and silver stocks? Well, these were kind of the standout on the day. Gold up 0.67%. New closing highs off the lows after this strong move up, and gave back half of it just the same. Now we're in another leg higher on gold here. This is corresponding roughly with that 2000 level where we tried to break out above back here but couldn't quite hold it. GDX. We own Nugget, which is a 2 times GDX, up 1.6% on the day, still below the 200-day moving average, but a lot of individual names in here with tight patterns and breaking above recent consolidations. Silver up 1.3% today, another gap up, challenging the highs from back in August. Bitcoin had a weak day today, down 3 point, the BitO anyway, This is the Bitcoin futures down 3.72%. Couldn't get anything going at all after an attempted breakout last Friday and over the weekend, but gave it back up. That didn't stop Coinbase from having a very nice positive reversal. We'll look at that when we get to the tail of the tape. So Bitcoin reverse lower now. Let's go to bonds. BND, here's the broad bond index, up 0.61%. Prices are up, yields are down. Here's the price of the TLT, the long bond, up high, a new closing high over the last 5-6 weeks here, up 1.7% on the day. That's going to mean that the 30-year yield should be lower, and it is down 1.52% coming into this 4.5 range level, and TNX, the 10-year, below 4.5, down 1.86%. So that's the inter-asset correlation. Let's go to the tail of the tape. You can pause this. Strong holiday sales reported, and that's the theme that we're going to address today when we look at a couple of charts. Day count, 4-day consolidation after being up 16 out of 19 days. 18 days above the 8 EMA, 17 above the 21 EMA. I talked on Friday about, from historical purposes, this isn't necessarily stretched, but this certainly is. Trending above the 8. Gold and silver stocks, the standouts, barely positive, were XLY, XLU, and XLRE. On the downside, the dollar, Bitcoin, oils, regional banks, healthcare, and biotech. In-house in the portfolio, we did some offensive trimming on CrowdStrike, booked a 15% gain. Why? Because Zscaler is reporting after the hours, and CrowdStrike reports tomorrow. After hours, CrowdStrike, Zscaler down about 6%, despite a beat and a raise, but it's selling off afterwards, and that happens frequently with stocks that have made a good run. CrowdStrike down 1% in sympathy after hours on that. We also did offensive selling on Microsoft, still above the 8 EMA, but not doing 2 times what the S&P is doing. We booked our gains on that, and we added to Nail. This is 2 times the ITB, really tight range coming down into this 8 EMA. It initially had a weak open and then showed some strength late morning. So we added to it, took that up to a 3% position. That was the only buy today. Net, our adjusted beta down a couple of ticks to 1.77. Bottom line on the day, day 4 of the tight consolidation with a weak close, leaders still looking fine. Let's take a look at a couple of individual names now, and as I mentioned that these would be tied to retail and the strong retail numbers that were reported. Affirm, they do pay as you go, and massive increase in their volume reported by Adobe Analytics, up 12% on the day on 200% above average volume, breaking out of this cup base. Next up, we had Shopify, who reported a very strong earnings and was rewarded today, up 5% on the day. Symbotic, SYM, robotics used. Walmart's a big user of this strength off of the holiday, strong holiday sales news, up 13% on the day. Let's take a look now really quickly at some cyber stocks. Last week, PanW gapped down on its earnings report, closed at the high of the day, and has done nothing but go up since then. In fact, breaking out of a flat base. Sometimes gaps down do put in the close. Let's take a look at some other leaders in here. The one that we own, CrowdStrike, we've taken a couple of profits on this and sold another piece of it today, trending nicely above the 8 EMA, down 1% after hours. Earnings tomorrow. We'll be watching for the reaction there. Here's Zscaler. Basically as nice, or maybe as of late, a mildly better chart than CrowdStrike, but down 6.7% despite the beat and raise that they reported after hours. But let's take a look at the ETFs here. Cyber, this is a broad ETF out to higher highs, breaking out of this flat base. And for the most part, the relative strength has been trending higher since August in this sector. So there's cyber. Let's take a look at another couple of stocks that are looking good in there. CYBR reported earnings. That gapped up, made new highs. Fortinet did not have a good reaction to earnings. It gapped down. That was 3 weeks ago. And QLYS, another cyber stock, had a nice earnings move and has continued higher. So we may be looking at getting into Zscaler off the 21-day, which is right where it is, right back at the top of this breakout range. Maybe a good low-risk entry tomorrow. We want to see how it acts after the market opens. But we'll hold our CrowdStrike. The plan now is to hold this quarter position that we have into earnings tomorrow. So retail and cyber, two themes that are acting pretty well. Let's see what tomorrow brings. And with that, I am going to wrap it. As always, like to hear from you. Email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. GROTECTION is our flagship portfolio. Stands for growing assets in uptrends, protecting them in downtrends. Market is an uptrend right now. We're long and looking to add to our gains. We'll get defensive if the market does not hold this most recent breakout. And with that, I'll wrap up the video for Monday, November 27th. This is Don Vandenbord with Revere Asset Management, telling it like it is.